So, I mean, there was a lot of worries going into the quarter, and it looks like, at least on the top and bottom line, things look okay. Can you go beneath the headlines and give us a snapshot of what you're seeing right now?
Yeah, no, I appreciate that. And, it was a really strong quarter, I think, across the board. As you look at, the revenue side, net interest income, really performed, as we expected and was quite good. Really driven by the increase in rates we've seen over the last year. You saw good fee momentum, particularly in the trading businesses and other areas. And on the expense side, we continue to just execute on our plan to drive more efficiency across. And underneath that, you see really good activity on both the consumer side and the commercial side still. You are starting to see, a slight gradual increase in credit charge-offs, but that's to be expected given, the environment that we've seen over the last few quarters. But underneath that still is good activity, good spending. People came into this environment strong, and you're seeing that play through, I think, across the board.
Let's just dive into those rising credit costs on the loan loss reserve bills, especially on the consumer, autos and cards. What can you tell us about the trends there that you're seeing that might have you a bit worried?
Yeah, the increases across the consumer portfolios are actually quite modest when you dig into the detail. And in the card space, you're seeing just a very gradual weakening, which is what you've seen now over the last couple of quarters. And on the auto side, you actually saw it get better than it was in charge-offs versus the fourth quarter. And so you'll see that move around a little bit, but it's been still very, very gradual given the amount of liquidity people came into the environment that we're in with, and also the behavior that we've been seeing over the last number of months. And so I think it's still quite good, and the consumer side was quite modest.
What about in the commercial real estate book? How exposed and how concerned are you about the trends there?
Yeah, look, there too, the performance to date has actually been quite good. You're not seeing systematic stress translate into loss content in the portfolio, even in the office space yet. That's the story is going to take play out over an extended time period there. But we did up our allowance for credit losses in the commercial real estate business because we do expect to see some stress there over time, but it's going to take some time to really play out. And it's going to be very specific to individual properties, individual cities, and individual situations that I think drive that. But it hasn't quite translated yet into any significant losses to date.
Hey, Mike, some of the commentary we got from other banks this morning was that, yeah, we got sort of a bumper crop in deposits. That's moderated, but we don't expect necessarily those deposits to be sticky. I wonder if that's something you would concur with.
Well, I think anytime you get a big increase in deposits in a short amount of time, you have to be really cautious in how you sort of think about those. And it's likely some of that will revert, across the board. But I think it'll just take some time to play out. So I think that's certainly a view that I would concur with at this point, until you get a little more history and a little more time to go by.
Is there anything more you can tell us, Mike, about what you've seen on deposits after March 9th? I thought overall they were down about 2% for the quarter, but what do those flows look like right now?
Yeah, look, we definitely saw, as we said on our call, we saw a bit of an increase right in the middle of the first few days of when we went through, that week. But that has abated, and those inflows have really stopped. And so now you're back to just BAU activity. In any given day, and payrolls may be coming in or other things are happening. But so you see normal ebbs and flows on a daily basis across the different portfolios. But again, people are out there spending, right? So that on the consumer side, the biggest part of what you see happening is people spending the money they have. And I'm sure all of us see that in our daily lives in terms of the activity around us. And so that's good to see and healthy and should help, help support the economy.
What about loan growth and demand for loans? What have you seen since the episode, the failure of SVB? Yeah, not a lot, to be honest. And I think if you zoom out just a little further, if you look at what happened last year, in the first and second quarters, really where you saw that strong loan growth across the board, and not just us, but across the industry.
And since then, it's been pretty moderate and has moderated quite a bit. And you know, overall loans are roughly flat, you know, plus or minus a little bit over the last, you know, three quarters. And so you really saw that moderate quite a bit. And since, you know, over the last few weeks, that really hasn't changed in any significant way. You're starting to see a little bit more activity in some of our middle market, you know, customers, particularly as inventory levels grow.